Hello and welcome. You're tuned into CNBC TV18 Prime. Let's get cracking on a brand new edition of The Big C from CNBC TV18 Prime Ionic Wealth Studio. I'm Manisha Gupta, back with your daily dose of commodities, crypto and currencies. A quick read-through of the global equity markets to begin with, and the Wall Street notched yet another winning session on Tuesday. The blue-chip Dow Jones marked its third straight gaining day, closing with gains of over 600 points. Investors are trying to find an obvious catalyst to call these gains consistent between now and to the end of the current year. The stocks in Asia Pacific, in the meanwhile, are mirroring that up move that we saw on Wall Street. Back home, the Nifty is comfortably perched above those 26,100 levels, building on those morning gains. To the crude oil prices, and they're hovering around those 5-week lows as peace negotiations between Russia and Ukraine pick up further momentum. Meanwhile, the US dollar index has lost some steam on the back of rising bets on the rate cuts from the US Federal Reserve, pushing gold to a near 2-week highs, and silver prices as well gained to nearly 5-week highs in the international markets there. Let's talk cryptos, and for joining us to talk about that is Vikram Subburaj. He is CEO, Geotus.com. Vikram, hi, thank you so much for joining in. It has been anything but a very, very, very volatile year, as you can say, for 2025. How would you look at the current year? In two halves, I'm sure, because the first half was all celebratory. Second half has been all about profit taking.
Yeah, so it more or less looks like the first half, a lot of people definitely had a portfolio that was looking really, really good. And the second half seems to be the market trying to correct itself so that it gives way for the next year to start with a very good outlook. So yes, the markets are looking red. It is not the prices a lot of people were expecting. Bitcoin went down as low as $80,000, and now it is stabilizing at 88,000. But yes, you're right. It looks like all the emotions have been compressed into a single year that the market is noticing.
Oh, yes, it's been a full circle, hasn't it been? Vikram, also from where we are trading right now at around, we've seen 80,000 as well, 86 or 87 is where we are holding at this point in time. But would you say that the correction is still not fully done? And this is something that the markets do anticipate after every Bitcoin halving year?
Yeah, I mean, so this time the reason for correction is what everyone is trying to understand in detail. So if we get into the reasons, yes, the market was actually expecting a lot of liquidity to enter into the system because of interest rate corrections that would happen in US. Now, but the fact that it has gotten very clear that they might not be having consecutive interest rate corrections, so the market has started moving away from this alternative asset to traditional assets. So that has taken a big hit on cryptocurrencies for sure. Now, ideally, this is also an outlook that has gotten into the market that there will be more fund allocations that will be happening into alternative funds like cryptocurrencies, or will the markets move to the traditional investments, or will they move the funds back to US dollars, which is appreciating now? So that is the thought process that is going behind to understand if the corrections are over or the corrections are going to go deeper. But the way I see it is the biggest alternative asset is the gold, which is still doing really, really well. I think that will take a cue from the 5,000-year-old asset and wait to see that even though for short-term time period, the markets or the global economic scenario are looking to be stable, the long-term outflow, still there's a lot of doubts there. So assets like Bitcoins will again see a good upward cycle is what I see, considering the fact that this is a short-term correction is what is noticed, is my outlook.
Vikram, also do comment on the fact, and I was just going through some data, and it tells us that there are 37 million unique cryptocurrencies out there. This is as per the data that was put in together by September 2025. But then again, the market cap, when you look at that, is taken into account by taking in 15 to 20,000 cryptocurrencies, and various exchanges, the global ones, whether it's Coinbase or Binance, give out only 300 to 400 cryptos to trade within. For the Indian markets, that number is even lower for that matter. How are you looking at these huge numbers and what the market is really out to do in sense of so many smart contracts, so many platforms being created, whether it is for utility or not?
Yeah, I think while you were asking this question itself, 1 million new would have gotten added now. Uh, so yeah, so it's you should see cryptocurrencies as software products, right? Now, as a matter of fact, when you start considering it like a software product, the AI industry would put crypto industry into shame with the number of AI products that are getting in, right? So when you think about a software product, definitely there are going to be a lot of products that are going to come out. A lot of these products are going to be the same use case even that they were solving. Now, obviously, in these 37 million, there are definitely going to be only few winners. Or else, imagine our lives. It is going to be very tougher that for each and every activity in our life, we should be dependent on a different token or a different utility, right? So there are going to be a selected few winners. Obviously, how exchanges pick and choose these tokens is one, looking at the credibility, looking at the team, looking at the economic structure and everything, and then we try to list the tokens. But yes, the bigger thing behind all this is also the users' demand for these tokens play a larger role. So yes, there could be 37 million. There could in next 2-3 months this could even cross 40 million. But like in every market, this is going to consolidate. Uh, if you see 10 years down the line, I think not more than 100 are going to be very relevant, is my opinion, right? Because you're not going to be roaming around with so many tokens for each and every use cases, right? So consider it as a phase of a lot of explosive exploration that is happening. And once the exploration is over, it will drill down or drive down to just 100 or even less than that tokens.
Vikram, when we look at the Indian markets, and would you say the only reason that people buy it here is not for its utility or use cases, but more in sense of returns?
So there are two phases, right? Now, if I can use cryptocurrency right away for a utility here in India, there is a lot of regulatory questions to be answered. Now, one of the biggest use cases that came about in the last 1 year is stablecoin being used for cross-border transfers. Now, can I use that use case in India? Is still a big question there. Now, the other parts, real world asset tokenization, where you can tokenize a land to real estate and anything and enable it for even people who have really smaller funds to invest in them. Now, a lot of these use cases, though they are getting deeper in countries like Dubai, Singapore, Hong Kong, it is a regulatory question that in India, are these use cases are going to be used, or it is going to be only trading which is going to be happening in these tokens. At this point in time, yes, the nation is predominantly into trading because for use cases, you need a lot of regulatory intervention that has to come in. And I would also accept that, though I'm saying regulatory intervention has to come in, crypto is such an industry, it is not even very easy to regulate, right? So when I talk about regulation, each of this utility, I'll be talking about different regulations. So yes, with regulations, a lot of use cases. Till that time, I think we have to stick to trading.
Vikram, how are you also looking at 2026 from here on? Because 25 clearly has been a very volatile year, eventful as well. Markets still awaiting clarity to be cleared. We've seen Genius Act done and clarity seems to have stalled as of now. That's one thing that the street will watch out for. But 2026, what all does it bring to crypto as an industry?
Yeah. So the biggest adoption catalyst that has been in 2025 as well has been the regulatory clarity that has come in from US. Yes, there were a lot of acts that were supposed to get gotten passed this year itself, but it is being pushed to the next year. But the general mood in the crypto industry is a lot of these acts will see the day of light by next year. And impact of this will be realized next year. So when a country like US is going to bring in with regulation, it becomes an easier playground for others to follow, or easier playbook for others to follow. So yes, regulatory intervention is going to be one key thing that is going to drive the markets, and not just US. We are also expecting from the Indian front. There is a lot of promising outlooks that we are seeing that that could be something positive that can happen. Definitely, the industry is working a lot towards ensuring a lot of effort is put on the AML and CFT front. We are all hoping that that is again going to turn into some positive regulations going to come into the industry. Now, apart from the regulatory front, if you notice this year was mainly driven by institutionals putting in or plowing in most of their funds into the crypto, which was driving Bitcoin and Ethereum prices, especially in the form of ETF. Now, in the last few months, definitely a lot of funds have moved out. Institutions have definitely gotten worried and they took their funds out. Now, ideally, 2026 is again going to be making sure a lot of trust building happens with the institutions to bring the funds back in. So, ideally, that is what I'm noticing. Now, it is though there has been a correction. This correction has not, according to me, it is not the correction that happened 3-4 years back, where we saw $16,000, somewhere around from $60,000 to $65,000. We saw $16,000 touching. So, I'm hoping that is not the correction. What is going to happen here? So ideally, 2026 is going to pull in more institutional money, this time with even more confidence. This is going to greatly drive up crypto adoption, is what I feel.
Vikram, one quick one then really. Going forward, would you say, even as India does await regulations, some kind of a framework to begin with really, but the investments or the investors here as well have matured? Are people buying more utility coins, lesser of meme coins, and do they understand crypto better?
Yeah, so I mean, that's a very, very interesting question. Definitely, the Indian market is out of meme coin craziness. I mean, it's not just have to do with India even. It was a global craziness that was going on since the last 2 to 3 years. But this year has been quite different. This year, we're definitely noticing a lot of people getting into the larger assets like Bitcoin and Ethereum. As a matter of fact, a lot of people are invested in Bitcoin, which is ideally the right thing to do, considering the fact that that is the large cap in this space, right? So yes, there is a huge change in behavior. I'm just hoping that this behavior continues and the meme coin bug does not bite the market again.
All right, yes, that's a good hope to hope. Meme coin is done with, and the Bitcoin dominance, if you look at that, the latest data does show that it stands at around 57% right now, so much higher than what we saw it in the first half of this year. Vikram Subburaj, as always, thank you so much for joining in, making sense of what really is happening in the crypto markets at this point in time. But with that, we'll slip into a short break. Next, we will be joined by Khoon Goh, Head of Asia Research, ANZ Research, to talk all things that is about international markets. Welcome back. You're with us on the Big C on CNBC TV18 Prime. Joining us now is Khoon Goh. He's Head of Asia Research, ANZ Research, now joins us on the show. Mr. Goh, hi, thank you so much for joining in. My first question has to be on currencies itself, and the dollar index has seen a 7% decline this year. Seems to be holding around that 100 level right now. But even with that kind of a dollar decline, it's not that every currency really got a fillip there. It's only very few, and majorly the G7 currencies that got some support. From where we stand right now, how do you look at the currency trade metrics?
You're right. While the major DXY index has fallen, it wasn't the case against every single currency. There are some that continue to be under pressure, such as the Indian rupee, the Indonesian rupiah, and the Philippine peso, to give you a few examples, including the Japanese yen, which had been under pressure for the last several months. And certain currencies are very strong. And really what it boils down to is the domestic idiosyncratic stories. That's really one of the major drivers of FX markets at this stage. And I think that's something that's going to continue on. So whether it's central bank action or concerns about individual countries' fiscal positions, those will continue to be major factors driving currency markets. So we are no longer in the world of one trade, as we used to call it, where the dollar will go down and everything else goes up against it. We have to be very selective now, and understanding these individual nuances is going to be key, especially as we head into 2026.
Oh, absolutely. How do you also look at the US Fed rate cut probability now? From 44% in the previous week stands to an 80% right now. I mean, that's quite a change in a week, would you say?
It's a massive swing in market expectations. Now, to be fair, I think that swing came about because there were a few Fed officials that sounded hawkish, and there was also the market response to news that some of the key economic data, like the CPI and non-farm payrolls, was only going to be available after the FOMC meeting. But the roundabouts came again when some Fed officials started to sound dovish again, arguing for the case for cuts in December. And I think now markets are pretty much settled on expecting a December rate cut. We are on a December rate cut camp as well. We believe inflation is not a major issue, and the labor market is weakening. So I think that is case enough for the Fed to cut in December. But as we enter 2026, I think that's really where the Fed might decide to be a bit more patient. They might not go for back-to-back cuts. They might choose to pause and just assess the lay of the landscape to see whether or not the cuts they delivered so far are working and whether or not they are still right to be concerned about inflation.
Khoon, as you mentioned, the US data in the recent days has been quite mixed, and the markets would be looking at a lot more today after what we've done yesterday. The third quarter GDP numbers as well come in today. With all this data coming in now, and we do understand it's delayed, you don't know whether it's properly surveyed and collected as well with that longest government shutdown that we saw as well.
Look, the Q3 GDP data should be an accurate assessment of where things stand because the shutdown really only impacted the October month. But there were enough indicators, such as the Atlanta Fed GDP Now metrics, for example, to tell us that Q3 GDP in the US was extremely strong. The question is, as we approach Q4, and given the impact of the longest shutdown in history, obviously that has to have some impact on activity. But is it enough to see a significant slowdown, enough to cause inflation to step down? I think that's the key question. Of course, we won't know those until well after the December FOMC meeting because of the delays.
Khoon, also comment on the overall asset classes right now, because we've seen the valuations overstretched, as everybody seems to be saying, when it comes to tech as a sector. We've seen some regional equities go in for a profit-taking. Cryptos have been declining as well. The only thing that seems to be holding is gold, up by nearly 58% for this year. What does that tell you?
I think that tells me, again, each individual asset class is marching to their own tune or their own narrative. So with the equity market, obviously the tech sector has done extremely well, but we're starting to hit some concerns about valuations, and the pullback we've seen over the most part of this month, I think, reflects that. But again, you will notice this is not uniform across the board. I mean, traditional, pure risk-off type of mood would have seen the dollar significantly stronger. You would have seen other risk assets getting sold off, but that did not happen. Gold, of course, remains extremely strong. Again, I think gold is partly because it has still some strong underlying fundamental factors and underlying physical support, whether it's from central banks or from retail investors looking to either hedge inflation or hedge against currency weakness. So I think that underlying support for gold is still there. And so, overall, we're still bullish on gold. And again, for other asset classes, again, that depends on what kind of narrative that happens to be driving that at that particular stage.
Khoon, would be interesting to get a sense from you on India as well. We are still awaiting the US-India trade agreement to go through. And until that doesn't happen, that's a big negative for the country. Of course, we are dealing with very, very high tariffs here. And then it is about the Indian rupee, which has hit an all-time low as well. 90 is just about a number right now.
Yeah, so look, our expectation is that a trade deal will be done. The question is, when is it going to be announced? And by how much would the tariff rates be reduced by? And this is really something that the market is waiting with bated breath. Now, for the rupee, on the other hand, there are clear signs that there's a bit of a cyclical slowdown in the Indian economy, and of course, the external position of India has deteriorated. There was a very, very large, surprisingly large trade deficit, for example, reported recently. And the RBI has definitely stepped back from trying to defend that 89 level in dollar INR. So again, that has prompted this weakness in the rupee. I think near term, we'll probably see a bit more pressure on the Indian rupee, especially with the RBI policy meeting coming up next week, where we're expecting the RBI to cut by 25 basis points. But I think the key is really once a trade deal is announced and assuming that it is a fairly good deal and the tariff rates get normalized, maybe hopefully to within a 20% type of range, which is commensurate with the other Asian economies, I think then we might start to see sentiment turn more positive towards the rupee. But until then, I think we're probably in for still a little bit of pressure on the rupee in the near term.
The other thing in the Asian markets is, Khoon, also the China as a factor. And while, of course, the China-US trade deal seems to be working in some sense, but China also has been talking about a stimulus measure here, because within China, there are these pockets where you are looking at weaker demand still continuing, whether it is about property and then, of course, metal smelting as well. how would you look at China as reiterating yet again that there is stimulus coming?
Yeah, absolutely right. Now, the Chinese economy still has challenges. That's well known. A lot of that has already been factored in or priced in. We're still waiting for this domestic demand recovery to take shape. And one of the big challenges that China has at the moment is deflation. So we're still also waiting for all these anti-involution campaign to start to really turn the deflation narrative around. I think there are early signs this is starting to happen. The recent inflation numbers, for example, were not as bad as initially feared. So I think overall, the way I would look at it is there are still challenges facing the Chinese economy, but a lot of the downside growth risks have dissipated. And I think that should be taken as a positive. And that's why we're starting to see sentiment turn more positive towards Chinese assets. We're starting to see foreign investment inflows going back into China. Foreigners have started to purchase and get into Chinese equity markets now after swearing them off the last few years. That's why the Chinese yuan has actually strengthened. And again, today, the fixing was stronger, breaking past the 7.08 level, indicating that the authorities are very comfortable in allowing more appreciation of the Chinese yuan. So in short, yes, there are still challenges, but that's well known. I think there's potential for maybe some upside surprise for China, particularly for the yuan as we head into 2026.
Khoon, I'll wind out this conversation with one final question. And if you had to advise or if you had to look for a better place or a pocket within Asia, what country, what economy would you be looking at?
Look, to me, I think the ones that stand to benefit the most are those that are leveraged to the AI-related investment boom. And for that, places like Taiwan and even Singapore, which has been reporting much stronger growth, are definitely the ones that need to be paid a lot of attention to.
All right, Taiwan and Singapore it is within Asian markets. Khoon Goh, as always, thank you so much for joining in, and thank you for that conversation as well. Well, with that, that's all the time that we have on this edition of Big C. Thank you for watching.